Hey guys, it's Thomas Nissendal here from Better Trader Academy. How are you doing? I hope your trading has been wonderful lately. I have received a couple of questions if I could show some strategies from our hedge fund. So I thought that would be a good opportunity to create a short video and show you something from our database. So let me present you something or show you something from our database. So actually, we have a big database of breakout strategies, very robust, high-quality strategies. All of them are built exactly according to the framework that I'm teaching in Breakout Strategies Masterclass. So everything here is built to the letter based on this framework. We originally had over 1,000 strategies, but because we are updating all the strategies frequently every weekend, it was just too much and much more than what we needed. So we reduced the number of strategies and kept only about 500 best ones. I'll talk more about the amount of strategies a little bit later. So what our strategies look like? Actually, we built all our strategies in TradeStation, but we have a online database for the sake of our hedge fund. The tech team just in our hedge fund just developed some database so we can access the database through internet whenever we need, which is pretty handy. So I'm showing you something from the database. In the database, we have equities, markets. You can see this is YMD, which is E-mini Dow Jones daily data. And here is a bunch of some other information about each strategy. To be honest, a lot of these informations are for other guys in the hedge fund. I'm just the architect of the idea, architect of the framework, architect of everything, but then I have other people in the hedge fund who take care of the final selection and final portfolio building based on my framework and my directions. So they have some private information here as well. I'm not really sure, although I know what they mean. I'm not even sure if it's absolutely not important to talk about. And let me just show you the strategy. So, okay, so we have a bunch of strategies, actually hundreds. Each strategy we have, this is in sample, and then we have out of sample. So after this line, everything is out of sample. So just a brief look. Here we have more strategies and more strategies and more strategies and more strategies. And I could go on and go on and go on. So basically we have hundreds and hundreds of strategies looking like that across all the markets you can think of. So let me just show you also some markets. Basically, when we develop strategies, we do it in batches. So for example, we say we want a strategy for YM, which is E-mini Dow Jones, and then we start batching. So we run a special DNP process, design and prototype, which is in detail again described in our masterclass, Breakout Strategies Masterclass. And then we usually have a batch of strategies. So that's why you can see that a lot of strategies in a row can be for the same market. So for example, here we had a batch of E-mini Russell 2000 TF strategies. So that's why the following strategies also TF. You see this is another TF strategy. It is a intraday strategy. And here is another TF strategy, E-mini Russell 2000. And we produce strategies in batches. So we always have more strategies for the corresponding market. So then we can choose from. Then we switch to another market. So here we have a batch of soybeans. So this is soybean strategy. This is a swing strategy for soybeans. Here we have another soybean strategy, swing, trading both long and short sides. Here is another swing strategy. So this was a pretty successful batch. Another soybean. And when we have a good amount of strategies for the corresponding market we want to work, we again switch back. Now the framework works universally on any market, basically on this universe. So this is for Apple. We switch the framework from future markets to stocks. So the framework, the Breakout Strategy Masterclass, works for any market in this universe. And now we had a batches of stocks. So we had Apple, swing strategy, another Apple swing strategy, trading both sides, of course, long and short, so no bias here. Then we had another one. Okay, this is a different strategy already. So here we switched to NG, which is natural gas, and we had another batch of strategies on natural gas. So here we have another natural gas, and we have another natural gas, and we have and then we switch again to Google, so to stock. So here we have Google, and here we have Spider, okay, SPY. So we switch to ETFs, exchange traded funds. Again, the framework works universally for any market in this universe. So we switch to ETFs, and we develop Spider ETFs and another Spider. This is an intraday strategy, trading long and short. So we have both intraday and swing strategies. All of them are breakout strategies. Another Spider, this is another intraday strategy, day trading strategy. Another Spider, so no problem to develop anything on ETFs. Then we have, again, natural gas. We really like natural gas. Another natural gas, another natural gas. This was a pretty strong batch. Let me scroll down and have a look if we have other strategy. Okay, here we have gold. No, this is soybeans, and here we start with gold. So here we have some gold strategy on gold market, futures markets. So we basically have strategies on plenty of markets, basically on the vast majority of future markets. We have on some stocks, ETFs. And we have hundreds of strategies. We don't use all of them. We're just very picky. So we're assembling portfolios from just a few strategies. So, for example, our first CTA program runs only 5 strategies. That's all you need. So these only 5 markets, different markets. And with this just very small portfolio of 5 markets only, in last 6 months, we've been running for 6 months, we made 91% return with about 10% drawdown. So the reason I'm saying this is just you don't really need a huge portfolio. You just need a portfolio of good and highly robust strategies. So these strategies are super robust. They usually work across many other markets. And then when we design the final portfolio, we usually test a lot of portfolios. So that's why we have 400 strategies. We usually narrow down to, let's say, 50, and then we use them to build 10 or even more candidates of portfolios, and then we're just making a lot of decisions, and then we're basically get one portfolio, which is the final portfolio, which we then register as CTA and offer to our investors. We are a private hedge fund. We're not open to clients. We have a very small amount of private clients we only work with, and they're funding all the new CTAs. Right now, we're developing a second CTA, which will be based on 10 strategies and 10 markets, and we're planning to run one more this year with about 20 different strategies, which will be later during this year. This will be our CTA number 3. So that's why we also keep building strategies all the time. Right now, our servers are building new strategies, and that's basically it. So you see, it's pretty automated. You can also automate the whole Breakout Masterclass. We have a special add-on with full automation, so you can really automate. And I would say that the biggest part is the robustness. I would say that 90% of time our servers run robustness tests, which are definitely one of the toughest in the industry. And that's basically it. So now you can see a little bit from our kitchen. This is what we do, how we do it. And I hope you found this inspiring. Okay, so thanks, guy. Cheers and good trading.